Have you guys ever faced those days where you end very red on your P&L, and it's because you're making all these psychological, emotional decisions that are driving your trades or trade ideas and not actually following your system? Well, today I'm going to give you guys basically a somewhat of a solution to essentially how you're able to, like me, make some psychological decisions or mistakes or trades that are outside of your trading system and still end the day green. This day, on April 24th, 2025, on NQ, I made 3.60, so about 3.1K per account, and times 5, that's around 15.3K across all my fund accounts today. And it was just within trading one single hour. It's about 54 minutes of total trading time, including your hold time and everything. And that's literally all you need to really make 5 figures in a day. You need that, a good system, and most importantly, of course, the capital as well, right? Without the proper system and edge, you won't be able to make anything. You'll end negative no matter if you follow your system perfectly. If you have a negative edge, you're not going to make money in the markets. Because if you truly think you could just take random trades with no data behind them, like this or whatever, then you're delusional, because that's called gambling. And we're not gamblers here. We're here to make educated trading decisions driven by data. And I always preach data, because data is how you stay profitable. You don't stay profitable, or you don't even become profitable without data, right? You need data first. Data and discipline will lead you to success, and that's how you can make this a full-time career. So here, I'm gonna be posting this to the Discord as well for free, to all the Discord members. So what I like to do sometimes is post trade recaps videos like these to the free Discord server ahead of time, so you guys that are in the Discord, complete for free by the way, can basically see these videos before I even post them to the YouTube public. So again, if you're interested in that, make sure to just join the free Discord. There's no promotion whatsoever. It's just there, free resources in there as well, tools to help you guys just become better at trading and become more profitable. But this was literally just a 1 hour training session for me today on NQ, and bagged about 15.3K across all my accounts. And this just shows you don't need a ton of trading time. Like, you don't need to be trading for 8 hours a day or a whole session to make a lot of money. You can literally spend 1 hour every single day trading. 1 to 3 hours, I'd say, is a very good time range to trade actively. And if you have a very good system, all you have to do is wait patiently for your setups and execute, and you will basically be guaranteed to make money as long as you have a positive edge with good risk management and discipline, of course. But yeah, I'll be recapping all the trades here. Again, I post daily trade ideas and weekly trade recaps to the course members within the course content, and basically the private course members group chat. So again, if you're interested in that, take the 100 risk reward course and you'll get access to all that information. But anyway, here's the trades real quick. I don't want to make the intro too long here. The trades here that made me about 15.3K today. It was technically 2 valid setups. Okay, but you can see I took 4 trades. But yeah, nonetheless, you see in the beginning of the day, we just had purely bullish price action, like at open here, which is New York session opens at 8:30, but the New York Stock Exchange doesn't open until 9:30. So about 9:30 right here, we just had a huge bullish push. I mean, this is a massive move, 2%, within like an hour, and all the price was doing was going up. And I made videos, if you guys have seen the course video, about what I say is considered good and bad price action. This to me is considered bad price action unless you are like taking micro scalps, trading with the trend, right? You should always trade with the trend, but I don't ever teach people to take these tiny pullbacks and enter off them. And the reason why is because 90% of trading days, we won't have days where prices continues trending in one direction like this. This is a rare occasion. This doesn't occur often. And so this is an outlier in terms of sample size and data. Hence, I don't teach anyone to take these internal continuations here that are these tiny pullbacks, only pull back to 50% of the range, right? Or wherever the range started down here. So, because if you're taking these tiny scalps, the reason why is if you're taking these tiny scalps or tiny pullbacks, like off either OB, some sort of PY, whatever, 9 out of 10 days, you will get killed. Because price action doesn't deliver like this, where it's almost a straight line in 90% of those days. It only delivers like this 10% or less of the time. So you will get killed trading like that. Don't trade like that, and just stick to the system I teach you guys within the course, and wait for those 50% pullbacks into valid POIs, and then use the mechanical entry model I presented and showing you guys data that works. But these days like this, man, we just had bad price action going all the way up basically. Even throughout the day, we basically had pretty bad price action. It was just consolidating the way up slowly. We don't have any major pullbacks. We do have new value being created in the market here. So 50% here did get tapped. We took out inducement here. And essentially after taking out inducement, he had an entry model to go higher. So that could have been a valid trade starting there. I don't really see anything too valid back here. We took out inducement here. So you could have taken a trade maybe here. But even then, at this point, it would be rough and I wouldn't be taking any trades. Hence why I didn't take any trades here. Because when you see something like this, and it's just, to me personally, too far up in a leg to be taking a long unless I see new value being created, which is based on price and time. Meaning if after like 3 hours, this is what, about 3 hours, 3 to 4 hours, price is just going in one direction, creating small structure, then yes, that creates and shows us that there's new intent in the market and new value, and therefore we should then follow the new value with the new inducements being created rather than waiting for price to come all the way back down here to 50%, because it won't come back all the way down to 50% there until we hit the high time frame objective, right? And even then, it's not a guarantee either, because the bigger the ranges we create later on, the more new value we have in the market, and we don't always have to come all the way back down, especially when prices continues in one direction and it doesn't have it basically creates bigger ranges for us to trade off, and we'll trade off those bigger ranges on a lower time frame. So hopefully that makes sense. If that doesn't, you will understand what I'm trying to say. With enough screen time, you'll notice things like this occur, and it'll finally click, and you'll understand what I'm trying to say here. So like, for example, here, this would be a break of structure here to the upside. We don't care about all this imbalance down here when after 3 to 4 hours, you've just been going up and creating new inducement. So this is our break structure right here. And we didn't tap anything here. This is fully mitigated, at least on NQ. We just took out inducement here. And we came back to discount. Not my favorite discount because we're literally at the 50% level. I prefer something a little deeper, but it doesn't deny the fact we did take out the inducement and create that break structure. Well, after that, and discussing basically bad price action, I noticed we have finally a lot of good momentum. And what I'm defining as momentum is when we have price delivery where price is delivering in your favor or against you for the impulse model. But for this model here, for IFVGs, if you see price sweep liquidity, for example, we swept liquidity here above this high, and you see candles delivering in your favor several times in a row like this, where there's not only imbalances, but they're all the same exact color candles basically because they're all in your favor with a lot of momentum. That's how I define momentum. Then that's a really good IFVG entry model that increases the odds by a lot. So sweeping liquidity increases the odds for IFVGs by a lot, plus momentum. So if you have those two combined, you can achieve true like at least a 70% win rate, right? If you're taking A+ setups. This here is not an A+ setup to me. And the reason why is because we're counter trend still. So regardless of us having this liquidity that already got swept, we even manipulated. We had a fake move right here, fake reactions in the market. We even manipulated above this high and above this high here. Now there's no entry models. No, there's IFVG. So we manipulated people selling here. On the seconds, there's probably people selling here as well. But for me, I don't count that as much as manipulation, but sure, you can count that as a liquidity sweep. Internally, we have 2 liquidity sweeps here. And I marked this inverse fair value gap right here. And to me, it doesn't matter if it got mitigated or not. Some people may ask this, well, this already got mitigated, even mitigated to the OB here, to the tick. But to me, that does not matter. At least for inverse fair value gaps, that does not matter. For my other setups, of course, if an OB is mitigated or POI is mitigated, it's not valid anymore. But when we're taking IFVGs, we're looking for the nearest IFVG within the leg, which is right here. We inverse it with the body closure below here. And stop loss here, I would never put my stop loss above here because that risk reward is awful. I never take trades that are 1-to-1 risk reward with my main system. For Stop Hunter, the risk reward is typically smaller, so you can expect like 2 to 3 risk reward for Stop Hunter. But typically, I prefer setups that are 3 risk reward or higher. And I decided to put my stop loss right above the IFEG, which is one of the setups or stop loss placements I teach within the course. There's a lot of other options that you could have done for this setup, but for me, this was the most obvious because we had a lot of momentum, and I wrote a lot of also comments here. If you guys want to read, feel free. I'm not going to read all of them. You guys can read it if you like. Don't want to make the video too long, but essentially, when we have impulse moves like this, we tend to not come back to retrace to OB, which is my main favorite entry model. So because we didn't have that and we just impulse through with body closures below the IFEG, you can have a tighter stop loss. And it's probabilities, guys. Remember, price can still come back up here, and that doesn't mean your short is invalid if it does come back up here. It just means the probabilities that are low probabilities, but when they do play out, it's still probabilities in the market. Nothing's 100%. You could still take a short up here if you get confirmation anyway. So let's keep that in mind. Right here, this was a valid trade here. So 3R here was a valid trade. Now, the invalid trade here was this trade here. I kind of FOMO'd here. I'm not gonna lie. I TP'd at the 5-minute PY here, and if I go in here, you guys are gonna hate me because a lot of people cannot get used to seeing. Especially if you're new to trading, this is gonna look like a mess to you with all these time frames next to each other. But I typically actively trade with 3 different time frames: my high time frame, my low time frame entries, and the 5-minute, because 5 minutes is very crucial to me as well. But basically, yeah, TP there for 3 sword, and then you can read the comments here. I FOMO'd into a short here. Why? Because I was expecting this low to actually get taken here. Because I saw we had a reaction off this 5-minute and we failed. So people that were entering on the seconds here, we took them out. And yes, this could have been liquidity. This could have been internal liquidity sweep, sure. But to me, it didn't look like that because we didn't have anything visible on the 1-minute. So I was expecting price to go lower, except I FOMO'd here. So you could say technically it could have been a valid trade, but it's not like a trade I would have taken in the system I teach, which is what I trade every day. So it's not a systematic trade that I would trade that's mechanical. I just took a random short, I think, on this pullback. I don't remember entirely. Let me see if I can pull up the screenshot of my executions actually. So here's a screenshot of my executions here. You can check the prices if you like exactly, but I believe it was something around here. I just basically entered like on a wick or something when price is pulling back, and I have my stop loss covering a POI, and I was hoping for a slow to get ran basically because it wasn't holding. And we got an SMT here. If you don't know what SMT is, check one of the course videos I posted in an advanced course. It goes over exactly what SMT here is. But basically, we made SMT with ES, which is like asset divergence. Hence, we actually did take out this low, and that's why my short failed here. And I don't remember exactly. I could have entered here after we made the SMT. I don't remember exactly, but nonetheless, it was a loss, an invalid loss. Next up, we had bullish candles here going in my favor. You can see how we have displacement, right? But displacement just means a big move, right? We had a big move above this intrinsic character here. And yeah, we basically had multiple candles in a row in my favor. Now, it's not as much momentum as here, because here you can see we had way more bearish candles. 1, 2, 3, 4, 5, 6, 7, 8 bearish candles in my favor. Here we only had 3 bullish candles in my favor that did only have only one candle had an imbalance, and it wasn't confirmed when I entered. So you can see there still is a momentum difference between this and this, hence why price here came back to the OB. There's no exact number. You guys can backtest that if you like, but I don't really do that. It's just roughly looking at how many candles go in your favor. If it's a lot, with a lot of imbalances, less likely to come back. Here, unfortunately, it came back to me, so I entered half position because I didn't want to miss this move. This is an A+ continuation model that I teach you guys, right? Because it's pro external trend, and we tapped into the origin here. There's nothing else below. There could have been liquidity, but we took that actually with the SMT, so that's an even higher probability. This is an A+ setup here. But I've noticed we did mitigate this flip here in the 50%, but to me that wasn't too important because drawing liquidity is higher. So drawing liquidity is number one. You need narrative behind your trades, like I always preach to you guys. But we had a buy closure above, we had IFEG. I entered half my position, I believe, on this first push because I didn't want to miss the move. So half my position got 2R almost. which is again not part of my system. I don't like to trade 2R systems because the risk reward is part of my edge, right? And the lower the risk reward, the less my edge becomes. I will still have an edge because my win rate's about 60 to 65%. So even with a 1R system, I do have an edge, but it's not a big edge. And hence why the purpose of this video is I want to talk about basically that if you have a very big edge in the market, a high EV value of your system, you can afford to make a few emotional mistakes like this. This is only one loss, right? If you look at trading from a 1,000 trade perspective, or however many trades you take within a month or a year, within a year, take 5 trades a day, that's about 1,000. Within a month, I'd say most traders probably take 1-2 trades a day, so max 40 trades, right? 1 out of 40 is not going to affect you a lot unless you have only a small edge or small, tiny profitable system. Then yes, it could have an effect. But even then, one loss shouldn't be a problem. Now it's a problem if you take like 3 to 4 losses in a row, because not only does that have a bigger impact statistically and mathematically, but it also has an impact on your psychology and how you view the markets, and you will get yourself really confused. And you will stop focusing on the technicals in the chart, and at that point you start just focusing on your emotions, and you just take awful setups after that, right? You go in a spiral where you keep going down, down, down. So don't do that. If you take one loss and you know it's an emotional mistake, recognize that, make sure you're present in the moment, and just continue trading your edge. Relock in, focus, train your edge. Here we had an OB on the 1 minute. This is hard to see, guys. I'm gonna delete this here so you guys can see it better. But you guys know I took the IPG initial entry here, and I took a scale in here. This is basically scaling in. It's not my I want to say scaling in because this is not entirely my scale in strategy. My scale in strategy, I made a separate video on that, and that's basically where the first position goes break even, and my scale in would have been like higher up here if I were to scale in. So that's not a scaling method. It's just me adding on to my position so I get a full basically risk on this trade. But we had a 1 minute OB here from an OB entry model, but look at the risk reward. I mean, it's 2.28. It's still an A+ setup. It's just, again, I don't like to take that. I prefer usually, it's not even that I prefer, it's just that usually the market will give you like 3 risk reward on a good trade, right? On a good trade that wins, you will typically get 3 risk reward, which means price will typically retrace or give you some type of entry model where you can get that 3 risk reward out of the market. From my back testing, right? I've done back testing on even using static risk reward, and 3R just works the best, right? Has the best combination of your risk reward and win rate. Unless you're entering on the seconds, then it's a whole different game, because on the seconds you can get like absurd risk rewards like 1-7, 1-6. But I don't like to trade off the seconds too often, only when they have a small range. And I made a separate video in the course discussing when to use seconds. And those times that you can use the seconds in those market conditions that I explain, you can catch a ton of profit. But nonetheless, I went on 30 seconds here, and we had a 30-second OB here, so I just took it off there. I should have had a limit order here, but I kind of lagged, I'm not gonna lie. I was a little late in setting my limit order there, so I just market executed as soon as we tapped it, and I think I got my fill around here for about 4 risk reward here. So half my position at 4 risk reward, and the other half was at 2 risk reward roughly, and TP'd about at the week high, and that's basically it. I mean, there's nothing much else to this trade recap that I should really cover in this video. Again, the main point of this video is to explain you can afford to make 1 or 2 psychological mistakes and still end the day green like me. This is I wouldn't say it's a huge green day for me, because it is only, let's see, about 4, because this averages out to 2 risk reward with how I positioned. The other one averaged out about to 2 or 1, I think. So it'd be about like 3 plus 3 actually, I think. 6. So this is only like a 5 to 6 hour day for me. So not a huge day in terms of my typical standard, but I mean 5 hour a day, if you achieve that every day, that's still 100 risk reward in a month, which is the goal. And the reason why I named the course 100 risk reward, because you can achieve 100 risk reward a month trading the exact system I preach. So yeah, here again, it's just in a 1 hour day, so I completely don't mind. Making 5 hour in 1 hour is good. That's very good. So this is basic trade recap, and later on you can see we just continued higher. One more thing I wanted to point out was if you just go into daily here, this was my high time frame draw on liquidity. I actually marked this and sent it to the Discord group, like literally like 2 minutes, and then 2 minutes later we hit the draw on liquidity. Like before, we didn't touch the draw on liquidity, and 2 minutes later we had a massive 1 minute candle for the closure of the market, and we just hit that high time draw on liquidity. And this is a very easy daily draw on liquidity, right? We literally we took out daily liquidity right here, which is massive, and you know higher time frame holds bigger weight. And if you go like on the daily, we're bullish still, guys. We're still bullish. This was just a big mitigation here, really, to take out liquidity, take out sell side liquidity here, to go potentially higher. I am expecting right now, if fundamentals are good, like so far fundamentals have been, actually I think I'd say fundamentals wise with the tariffs and stuff, it's been going better now. A lot of countries are folding and such to the tariffs and negotiating. So I'd say if that continues, fundamentally we will break this high, break the all-time highs. So we had about 16% move right here to all-time highs. Very looking forward to it. If so, we would just get a lot of bullish days with a few bearish ones, and we'll reach all-time highs. So this to me was a very clear draw on liquidity. We reached the potential objective of price. We gave a good reaction on the daily, and all that means is on the daily or any time frame factually, highs are now weak if we're bullish. If we're expecting bullish pricing, highs are all weak. So I was not surprised at all. We did reach a high time frame draw on liquidity. I actually, when I was entering this trade, I was thinking low key of targeting that high time draw on liquidity. But looking at the time here, this is 3:48 p.m. EST. So the market's about to close. And you see this is the 1 minute candle that just straight shot to the high time draw on liquidity, which is absurd. But the market was about to close, and I don't want to hold my trade till like the last minute of the market closure, even though I have a high conviction in my draw on liquidity. I just don't, right? So I took out the trade, I just exited, and I'm pretty sure on funded accounts and Top Step, they have a rule: you can't even keep your position open past the market closure, which is like, was it 4? 4. I think you can actually hold till 5 p.m. I don't remember exactly, but I typically don't even trade that late anyway. This is one of those exception days where I will trade late. Other than that, I typically don't trade this late. I typically trade within the kill zones if I can. But yeah, there's definitely a rule on Top Step where you can't hold a trade to another day. That's the best way to word it. They will just automatically close your, not close your account, they'll close your trade for you. But even then, still risky as hell to, even if you have a personal account, it's risky to just hold overnight like that, because spread can occur and you don't want to get spreaded out. So again, it did hit my high time draw on liquidity, but I don't mind missing. I basically profited half of the move. I typically aim for catching at least 75% of the move, but again, you're not going to be able to catch that all the time. So we'll optimize our systems, but not to 100%. You usually can't do that. It's impossible. Yeah, I'm gonna end it here real quick, guys. That's basically it. I hope you guys had a good trading day yourself, and I'll see you guys in the free Discord if you haven't joined that. And yeah.